Government Bill, first reading. Inland Revenue Amendment Crypto Asset Reporting Framework and Amended Common Reporting Standard Bill 2026. Second reading. Secretary for Financial Services and the Treasury. President, I move the second reading of the Inland Revenue Amendment Crypto Asset Reporting Framework and Amended Common Reporting Standard Bill 2026. To enhance international tax transparency and combat cross-border tax evasion, OECD, the Organization for Economic Cooperation and Development, has been promoting the automatic exchange of tax information across jurisdictions. It has established CRS, the common reporting standard for this purpose. Tax authorities are required to collect from reporting financial institutions financial account information of overseas tax residents and automatically exchange such information with the relevant tax jurisdictions on an annual basis. This helps authorities detect and combat cross-border tax evasion. CRS was incorporated into the Inland Revenue Ordinance in 2016. Since 2018, Hong Kong has been exchanging information with partner tax jurisdictions on a reciprocal basis. The digital asset sectors have developed rapidly in recent years. In 2023, the OECD introduced the Crypto Asset Reporting Framework and amendments to the CRS. The reporting framework requires crypto asset service providers to conduct due diligence and report to their tax authorities information of tax residents from other jurisdictions that concerns transactions in crypto assets. Such information needs to be automatically exchanged among tax authorities on an annual basis. The amended CRS covers digital financial products and enhances reporting and due diligence requirements. We need to amend the Inland Revenue Ordinance to implement these new measures to fulfill its international obligations, maintain Hong Kong's reputation as an international financial center, and avoid Hong Kong being labeled as a non-cooperative tax jurisdiction, which would increase the compliance and tax burdens on Hong Kong enterprises in other tax jurisdictions. To ensure effective implementation of the Crypto Asset Reporting Framework in Hong Kong, we propose amending the Inland Revenue Ordinance to include the following provisions. 1. Definitions of crypto assets, reporting crypto asset service providers, and reportable transactions. 2. Reporting nexus criteria applicable to reporting crypto asset service provider that determine whether a service provider is subject to the reporting and due diligence requirements in the jurisdiction. 3. Scope of information to be furnished to the Inland Revenue Department. And 4. Due diligence requirements. We propose implementing a series of arrangements that include the following. 1. Mandating all reporting crypto asset service providers that meet the reporting nexus criteria with Hong Kong to register with the Inland Revenue Department. 2. Requiring all reporting service providers to keep relevant due diligence records, regardless of whether they have been dissolved or have ceased to operate relevant business. 3. Specifying that service providers may carry out the same due diligence procedures in respect of non-reportable users or persons, even though the service providers are not required to report the information to the Inland Revenue Department. This is to help reduce compliance costs. 4. Imposing appropriate penalties on reporting crypto asset service providers and their service providers for breaches of reporting, due diligence, and other administrative requirements, as well as on any person who knowingly provides false information in self-certification. For certain offenses, penalties will be calculated based on the number of days of continuing offense after conviction or the number of users or controlling persons involved. 5. Putting in place an administrative penalty mechanism as an alternative to prosecution to ensure that enforcement actions are timely and cost-effective. To implement the amended Common Reporting Standard, we propose to include digital money products in the reporting scope of the Inland Revenue Ordinance, specifying additional reporting requirements in respect of account holders, controlling persons, and their financial accounts, as well as refined definitions and due diligence obligations. Also, we will make technical amendments for the implementation of the global minimum tax under OECD's BEPS 2.0 framework. These proposed amendments will not affect the implementation of the global minimum tax. From December last year to February this year, we conducted a public consultation on the legislative proposal during which we held briefings for relevant stakeholders. We also consulted LegCo's panel on financial affairs in February this year. I'd like to thank the stakeholders and the panel on financial affairs for their support and valuable views on the legislative proposal. We have incorporated their views when drafting the bill. Through our ongoing dialogue with stakeholders from various sectors, we've learned about their concerns regarding the automatic exchange of information mechanism, such as directors' duty to keep records after dissolution of an entity. We're happy to listen to members' views at the Bills Committee, and we remain open to suggestions for improving the mechanism. If the bill is passed by LegCo, we will, starting from 2027, implement the crypto asset reporting framework. Starting from 2028, we will automatically exchange tax information related to crypto asset transactions with partner jurisdictions. In the same year, we will also implement the Amended Common Reporting Standard. The IRD will issue guidelines in due course and provide support to the industry to help them adapt to the new requirements. I wish to emphasize that our legislative proposal aims to meet the basic requirements of the OECD. Hong Kong's business appeal will not be compromised compared to other economies that are also required to implement the crypto asset reporting framework and the amended Common Reporting Standard. In fact, aligning with the latest international standards will give crypto asset service providers, financial institutions, and asset users greater confidence. President, I urge members to support the bill so that we can properly fulfill our international obligations and safeguard our reputation as an international financial center. I so submit. Thank you. I now propose the question to you that the aforesaid bill be read the second time. In accordance with the rules of procedure, the second reading debate is adjourned and the bill is referred to the House Committee.